Kirk Duckwell here with your Market Monday real estate stats for the Twin Cities area. Well, this last week was a case of some good news and some bad news. But before we dive into the data, click on that subscribe button. We know that knowledge is power, and the more knowledge that you have, the more that you can leverage the market to your advantage. So again, click on that subscribe button. Let's dive into the data. So the system that we use to track the showings per listing per week data was having some technical difficulties a couple weeks ago, we found out, and so we just received the revised numbers back, and that was actually tracking at a little faster pace than what we had said. So it's 4.96 instead of the high threes. So the market's moving a little faster as far as that showing activity than what we had in the previous video. However, it is still down over previous weeks. This last week inched back up just a hair. The good news is when we look at the whole market, though, the Twin Cities as a whole, that differential affected it very little. It did move the market meter just a hair, but we'll get into that in just a minute. Looking at the listing activity, new listings are up by 4%. So that's higher new listing activity for 3 weeks running now. That's some good news, taking some of that pressure off the market a little bit. And so if that trend continues, hopefully for buyers, provides a little needed relief. Something I wanted to touch on is a lot of people are saying, well, this market can't keep going up at the pace that it is. And the short answer is, yeah, it actually can. If we look back, we saw similar rates of increase in 2013 and then again in 2014 with nothing different than the seasonal drop-off. So, you know, we had a pretty fast-paced year, but that has happened many, many times in the past. And those are just a few of the recent examples. So, you know, you can play the seasonal market a little bit and maybe find some pricing relief. But as far as the long-term trends, don't expect some big bubble crash more than likely. Interest rates fell back. That's providing a little relief. Not that these rates were bad by any means, but they dropped back a little bit from 2.99 to 2.91. I mentioned that market meter. So we had, with the old information last week, the market meter at 8.5. So with the adjusted information, it moves it back up to 8.66. I do expect that showing activity as we look on at it over the course of a whole month will continue to drop off. We'll see those slight fluctuations, but the overall trend should continue to drop, providing that relief to buyers. For sellers, I've said it in past videos, it's still a pretty good market out there. You just put a property into multiple offers in a matter of just a couple days. So take advantage of it while it's still there. Again, if you found this information valuable, click on that subscribe button. Take care, be safe, have a great week.